I've been testing a crazy simple strategy lately and the results have been impressive. Over 10% profit on each trade. Now I know what you're thinking. 10% on every trade sound too good to be true, but trust me, this isn't some complicated algorithm. It's actually the opposite, simple. So the question is, where can you use this? Pretty much anywhere. Stock, crypto, forex, commodities, and more. Time frames flexible too, but I prefer 5 or 15-minute charts for this. So let's jump into a 5-minute Bitcoin chart for this demo. The key to this strategy is the linear regression channel. So go ahead to the indicator section and search for linear regression channel and choose the one by chart prime. This indicator uses math to analyze trends and drawing a channel around the price action. Think of it like drawing a line through the average price, then creating parallel lines above and below for support and resistance. It helps us spot potential overbought and oversold conditions, potential trend changes, and even fake pump and dumps. Now a quick tip for better visual clarity. Sometimes the channel can blend in a bit. To fix this, right click on the chart, go to the settings, then the symbol tab. Here, simply uncheck all the options. This cleans up the chart and make the linear regression channel really pop. So how much clearer that is? That simple tweak make a huge difference. Alright, so we've got our linear regression channel on the chart looking nice and clear. But now we need to fine tune it just a bit to make it work perfectly with our strategy. It's like adjusting the focus on a camera. We want to get everything sharp and in focus. We're going to dive into the indicator settings. Just double click on the linear regression channel or click on the gear icon next to the indicator name. This will pop up the settings window. Now we're mainly focusing on the inputs tab here. There are a few key adjustments we need to make. First, make absolutely sure that the plot linear is enabled. This is usually the default, but just double check to be sure. It's essential for how we're using this indicator. Now, we're going to adjust the length. The setting controls how many past data points the indicator uses to calculate the channel. We're going to change this to 180. Think of it like looking back 100 periods on the chart to establish the trend. And finally, we'll adjust the deviation. This controls the width of the channel. We want to set this to 1.1. This creates a channel that's just the right size for capturing the price action we're looking for. And that's it. No other changes are needed in the Inputs tab. And we don't need to mess with the Style tab at all for this strategy. Keep it simple. Okay, we've got our perfectly tuned linear regression channel on the chart. And remember, those lines above and below the midline are called the upper and lower bands of the channel. Now I know you're probably itching to see how we actually make money with this strategy. But there's one more crucial element we need to add. It's called market bias. This helps us understand the overall direction of the market, which is essential for making smart trading decisions. So let's head back to the indicator section again and this time search for market bias. You'll see a few options pop up. Choose the one I'm highlighting here. Click on it and it will be added to your chart. Now, what exactly does the market bias indicator do? Well, it uses something called a smoothed Heikin-Ashi candles to try and determine the overall direction of the market. Heikin-Ashi candles are a special type of candlesticks that filter out some of the noises in the price action, giving us a clear picture of a trend. The indicator then uses a coloring system to show us strong and weak market conditions. Bright colors generally indicate a strong trend, while darker colors suggest a weaker or more uncertain market. Alright, we've got the market bias indicator on our chart, which is great, but just like with the linear regression channel, we need to make a few tweaks to optimize it for our strategy. Think of it as fine-tuning an instrument to get the perfect sound. So let's dive into the market bias indicator settings. Now the first and the most important thing we're going to adjust is the time frame. This is really cool trick that can give us a broader perspective on the market. Since we're analyzing 5-minute chart, we want to set the market bias time frame one step higher to 15 minutes to give us a slightly wider view of the market's momentum. Next, we're going to change the period to 45. This is just the look back period the indicator uses for its calculation. We're going to leave the smoothing setting as it is. No need to change that one for this strategy. Then we'll change the oscillator to 1. This is just how the indicator displays at readings. Finally, and this is important for keeping our chart clean and focused, we're going to disable show Heikin-Ashi candles. We don't need Heikin-Ashi candles themselves displayed on the chart since the indicator is already using them in its calculation. And that's it. We're done with the settings for the market bias indicator. It's now perfectly calibrated to work in conjunction with our linear regression channel. Alright, so we've got both indicators set up and ready to rock. Now comes the exciting part, how we do actually use them to find accurate trading signals and make money trading. The basic idea with the linear regression channel is pretty straightforward. Traditionally, a break below the lower band is considered a sell signal, and a break above the upper band is a buy signal. But here's the thing, relying only on the linear regression channel can sometimes lead to false signals, getting you into the trades that go against the overall trend. That's where the market bias indicator comes in. Remember, the market bias tells us the overall direction of the market. So here's the key. If the market bias is green and the price is above it, we ignore any sell signals from the linear regression channel. Why? Because selling in an uptrend is generally not a good idea. We only want to take buy signals in this scenario, confirming the uptrend. So in an uptrend, we'll look for the price to break above the upper band of the linear regression channel for a buy entry. Now what about the market bias as red and the price is below it? This indicates a downtrend. In this case, we ignore any buy signals from the linear regression channel. We only want to take sell signals confirming the downtrend. We look for the price to break below the lower band of the linear regression channel for a sell entry. Regarding risk management, there are many ways to manage your risk, but a simple approach is to place your stop loss either just below the lower band for buy signals or just above the upper band for sell signals, or below the recent swing low for buy trades or above the recent swing high for sell trades. For your target, a common strategy is to aim for a profit that's 2 times your risk. So there you have it. By combining the linear regression channel with the market bias indicator, we filter out a lot of those false signals and significantly improve our strategy.